Hey, good morning, everyone. It's Tuesday, June 4th, 7:20 a.m. here on the East Coast. Prices of BTC currently at 7,920. We had this big trading range at the end of May, and it looks like we just broke it finally yesterday. So now we're looking for new price discovery. So let's get to the analysis and see what's going on. All right. So on the 2 hour chart, we see some pretty strong candles right here, dumping to the downside all the way from a high of 8,500. And I'm sure people are probably wondering, is this the start of the big bearish wave that's going to come, drag prices all the way to $2,000 or $1,000 or anything like that? Listen, guys, whenever we have prices pull back like this, it's important to keep your rationale intact and understand that prices could not have kept moving up forever. Okay, at some point they needed to pull back just a little bit, even if it's I personally wouldn't even think this is that big of a pullback. We basically went from this area, which is like a $8,900 closing of these candles right here, as well as these rejections, to essentially 7,600, or these candles that close around 7,900. So technically it's $1,000 drop. Okay, $1,000 in the grand scheme of things when it comes to BTC moving up from this bottom that was placed in from 3,300 to almost to a high of 9,000. That's really not that high. Okay, so you have to keep in mind the bigger time frames at play when you start calling for the death of Bitcoin. All right. Okay, so let's get back to the analysis. And with prices being at $7,900 currently, this area right here is fairly critical to hold by multiple reasons, and I'll show you why. But first, I wanted to show you guys how the price, when you draw trading ranges like this, how price moves up and down between the ranges is critical, and also the EQ, which is the equilibrium, which is essentially like the 50% fib of a range, how it acts almost as a resistance, or basically an area that has a decent amount of supply through it. How that acts as resistance is very critical. Okay, so you can see that once this trading range was established, this top, this bottom, okay, once we touched it again, got rejected, closed a couple candles above, you can see prices dragged back down, broke the trading range, climbed into the trading range again, struggled through this EQ of this area. And if you even mapped out the fib from this top to this bottom, this entire range from this high to this low matched up to the 618 fib. Okay, you can see we could not close strong 4-hour candles above this. Okay, let's see how the 4-hour looks. You can see we just struggled over and over again. Okay, every time we hit a 4-hour candle above, we tried to break right through, right beneath it. Okay, see one hour or one 4-hour candle right there, the other right there, and then we tried to close up above it again, and then boom, we got rejected and pushed down again. Okay, so this is how you are able to gauge the strength of specific fib levels, as well as the larger range at play, which is this big trading range. Okay, all right, and the only reason I say that is because I want you guys to be able to do this on your own. Okay, I know there's a lot of people on crypto Twitter, or I don't know, Reddit, whatever you're paying attention to, the paid groups, pretend to be analysts, and I'm sure some of them are probably freaking out right now because they didn't know how to properly manage the risk. And even though we did not have some great trades, here's how we ended up. Okay, all right, here are the losses that we had over the last 24 hours. On 5% capital, we only had 3.8% loss. On 5% capital of XRP, we had a 4.4% loss. Okay, previously to that though, we've had all these gains right here on larger capital sets. Okay, this was a 15% trade because we closed this position right here with 5% profit, this position right here with 2.5% profit with a 33% gain, 20% with a 1.7% loss, 10% BCH with 10% gain. So you can see that the point is, when taken in context of all our winners, these small losses are very minimal. And this is exactly what it takes to be a successful trader. Being able to manage your risk in a market that, even if you don't know what's happening, right? Because again, guys, no one will know, okay? No one will ever know where markets are going to, take a crap like this. The best we can do is manage our risk at positions like this, because I stated to my community that because prices looked like they were heading up, it's okay to have some exposure in this bullish rectangle, okay? And I even explained this in my community, why exactly this is a reason to trade right here. I stated this Saturday, as you can see, okay? This is a bullish rectangle. More than likely, these prices do break up, okay? So this is exactly where we had exposure, all right? And you can see this bullish rectangle broke up the same way. Unfortunately, it couldn't keep going up, so it came back down. And beyond that, once it came back down, we did state that we would exit the positions. I don't know where it went. But anyway, somewhere down here in our updates, we stated that we would exit the positions and get out at a small loss, okay, due to our stops being hit. Okay, so this is how you want to be able to trade and be successful in this market. All right. Okay, awesome. Beyond that, I mean, obviously we've been scalping trades here and there. This ETC right here, you can see this parallel channel. We got in at 953. Our target was 967. Let's see if that came true. ETC USD. There we go. Okay, you can see this is that same chart. Okay, we broke all the way through, sold right here, avoided this big dump. Okay, this is how, small winners like this, we scalped this thing like, at least 3 or 4 times over the past 5 or 6 days. So all the losses that we have, guys, even the small ones that we have, we easily cover them in our scalp trades, and we definitely, effectively cover them in these big winners too, as you can see previously, right? All of these big gains right here, gain, okay? All of those are, tacked on and compounded to help us achieve the larger gains when we have small losses like this, okay? So this is why it's important to at least, join a community. If it's not mine, some other community with someone who's actually smart and diligent with their work. Okay, you guys see me doing this every single day, right? I put up YouTube videos. I do daily analysis for my community. I explain exactly everything I'm seeing, not just, spitting out random indicators and telling you buy or sell. I'm explaining to you because I understand what it takes to be a successful trader, and that it's not that easy to just come into this market and try to make money, okay? And I hope you know that too, okay? All right, going beyond that, where's my wave count here? So if we start going to the previous Elliott wave count, if now that this double top has been, so first let's talk about this, okay? Here was that rising wedge that I explained yesterday in my video. Again, if you haven't seen my video from yesterday, go watch it, because I told you guys that this is a rising wedge. Okay, this was not a parallel channel that most people were drawing to force in their emotional biases. All right. Though I had been stating that my targets were 10 to 12K, that didn't stop me from drawing this bearish pattern, which is a rising wedge. All right. Sometimes what people often do is, to be able to maintain their bias, right? Say their 10 and 12K targets, they'll ignore something like this and they'll try to force a parallel channel out of it and say, hey, look, see, it's going up. But I knew for the most part that, okay, if I'm wrong, that's okay, right? This was a rising wedge. Rising wedges have a higher propensity to break down, and this one did. On top of that, we had a double top, okay? But remember, I pointed out again in my video yesterday that this top right here around 88, 8900 with this top right here, let me draw that out like this and like this can only be validated once this line right here, this 8250 line, is broken on the daily to the downside. And clearly this one was, so now this double top has been confirmed. Not only that, two bearish patterns have been confirmed. This double top right here that I just showed you, and this rising wedge. Okay, so typically the rising wedge targets are the highest points from the bottom to the top. So from here, we broke down. So from this area right here, the target is technically about $6,700 to $6,800. That's how you measure the targets of the rising wedges. Okay. All right. So just something to keep in mind. And another thing that I stated was, you know, if we do break down past 8,200, which again, if we stretch this out all the way over here, right, it matches up, this 8,200 area matches up with this previous resistance. Okay, so this previous resistance, this structure essentially is getting slowly invalidated. Okay, if we go to this chart right here, remember that I had drawn this big trading range and it stated that the EQ of this trading range is around $7,500–$7,600, because remember we had this touch right here, this rejection, this support right here. So all of this tells us that this is also a pretty big support area around the $7,500–$7,600. Okay, and again, depending on which exchange you look at, we may have already tapped that. Okay, yesterday it looks like on Coinbase we went all the way to a low of, as you can see, $7,700. Okay, this one is $7,700. All right, so we've basically already tapped the EQ on some exchanges fairly closely, but on Bitstamp it looks like we may, you know, head down a little bit more. It's not necessary that we need to, but we can potentially, okay, come down to even 7,500 if this area doesn't hold. Okay, because this area, let me just draw a straight line through it, okay, just to indicate that you could see that there's a lot of chop in this area, right? This chop meaning, you know, there's a lot of price action that goes below it, but then quickly rises up, goes below it, and then finally dumps, right? But then comes back up, goes above it, comes down below it. So a lot of oscillation is happening around this particular line right here. And so it's also of no surprise that 7,900 was being met right here too. Okay. Now, point is, if 7,900 is broken, 7,500 to 7,600 is imminent. Okay, and I explained this in my community again yesterday, showing how and why it's important to watch these right here, these levels. Okay, 7,900 is going to be coming from, let me see. Well, first of all, 8,200 is right there. 7,600 is right there. I have to figure out where I got 7,900 from. Maybe it's this low right here. It could be this wick low right here where prices got rejected. But anyway, I think for the most part you guys understand that at least, at the very least, 7,600 is the next level to watch. I'm gonna have to figure out exactly where I got 7,900 from. So anyway, moving on, we're currently hovering at 7,900. If we do break that, 7,600 is definitely next. Okay, now I had drawn this Wyckoff distribution schematic a few days ago, or maybe like, I don't know, I think I drew it around here, so middle of May or something. Now remember that, you know, if we just sort of drag this up thrust down to about 9,000, okay, this could still be playing out. But for this to play out, we need potentially another up thrust retest, okay, and then potentially the big dump off. But one could make the argument that this was the up thrust, this was the up thrust retest right there. Okay, so this one right here is this right here, And then now we're seeing this movement right here, this price action movement right here. The only way to figure out if this is all going to play out is if we see these last point of supplies coming about when we start hitting this area as resistance, come back down again, hit this $7,600-$7,500 area of this big trading range that I showed you earlier. Where did it go? Oh, this big trading range right here. If we start hitting that level and we start breaking this too. Okay. Unfortunately, Wyckoff schematics, distribution schematics, it's hard to tell, when you're going to be playing this out until you're in the middle of it. Okay. But if I'm not mistaken, we are technically, if this is actually playing out, we are technically either at the up thrust, we finished that, or we might have just finished the UTAD and now we're starting to come down. Okay. So we might be in phase C or we might be in the ending phase of phase B. Okay. If you go to the Cryptosomniac trading view, you can see a clear explanation of how this works, and you'll get to understand exactly what's happening in the Wyckoff schematic. Okay. Aside from that, I wanted to talk about a couple different things other than technicals, which is being able to understand what's happening in the sentiment around the market. Okay. Specifically, when you start looking at Bitcoin as a search term, right, for the past couple of months, you can see in April it clearly hit this high once we had that big spike up past 4,000. Okay, let me sort of go to that. Let me sort of match up dates to show you guys exactly where we see these spikes. Okay, so here's the April 2nd spike, right there on Bitstamp. Okay, and now over here you see April 2nd big spike in the searches for Bitcoin, and then prices come down, not prices, but rather the search terms come down, and then another high all the way to May 13th and 15th. So let's see what happened there. Okay, May 13th and May 15th. So that's around this area when BTC broke 6,000. Okay, so it went all the way to 7,400, and then a few days after that it went to 8,200. Okay, so between 6,200 all the way to 8,200, all right, that's where we see this next big spike. Now we can probably say that because search terms are coming down, they're not hitting all-time highs again. All right, this is like your bearish divergence, if you will. Okay, because as you can see, prices then hit a top, a double top. They went slightly higher, but the search terms came down. Okay, right here, it's now at I guess a 76 points, if you will, and back here it was 100 points compared to the last couple of months. Okay, this is just an interesting way of looking at what's happening in the overall sentiment around the space and price. Okay, now people are probably saying that this has no point in it, but this has everything to do with it, guys. Think about everything that happens in price. That's because there's people from all over the world searching and putting their money in, or FOMOing, or panic selling, whatever, right? Every single one of these candles has a representation of people who are searching for terms like this, buying or selling their assets, telling their friends about it, family about it, putting their, I don't know, all kinds of crazy amounts of money, retirement funds into Bitcoin, okay, or crypto in general. Okay, so it has everything to do with it. It cannot be taken lightly that these search terms went up in value as price went up in value, and once price is essentially cooling off or topping off, the search terms also went down. Okay, now another thing that I wanted to show you that's interesting is here's something. If we start doing the past 5 years, all right, this is something that'll sort of make you a little bit happier. Is this was the high in 2017. Okay, this high right here that we had in price action where BTC reached 20K. When taken in context, look at how low we are. Okay, so this makes me feel a little bit better that in the first couple of days of June that we've had, we're basically at 12 points right now. Okay, compared to the 100 points right here that we had all the way up here at the all-time high. Okay, so we have a long way to go in terms of Bitcoin being a worldwide used search term for people who are either trying to search and invest in it, right? So that's why I still have high hopes for BTC over the next couple months, all right? I don't think that, this is it. This is merely a small correction and a pullback in prices, and I expect to see BTC alive and kicking over the next, couple of weeks. So when exactly, I'm sure you're asking, when exactly are we supposed to see the end of this move? Well, like I stated, that other than 7,900 and 7,600, if we break 7,200, then we potentially have more downside, okay? Everything moves in levels, guys. No one can predict that after this top that we're gonna go straight down to 6,000 or 4,000 or whatever. All right, if they are doing that, I would love to see where they got their crystal ball, because I've been doing this for a long time and I still don't know, okay? So point is, waiting for levels to hold themselves and show you strength is how you play the market. This is not a candle that you buy, okay? You buy when you start seeing, fading in volume of sell side momentum, all right? So clearly, you see volume diminishing right here, all right, over the past couple of days. But remember that, we need to see an actual reversal candle. We need to see a bottoming candle like this one right here that we saw. Maybe even, the start of a new bullish candle like this, at least on the smaller time frames. And then you could start thinking of a reversal. Okay, but for now, this is not really the area to buy. All right. Okay, so point is, when do we start seeing the end of prices correcting? So there's a couple ways to look at it, okay? If we simply go by the Elliott wave counts, right? The wave one took about 10 to 15 days right here, all right? And then the wave two took close to almost 44 days, okay? From this high of 4,200 all the way to a low of about $3,300. Wave three, if this is the end of wave three, say this is the end of wave three, this top right here, right? Wave four is supposed to take at least, somewhere close to the same time span, right? Even if it's half the time as wave two, that's fine, but you can't just take 4 days for wave four and then 44 days for wave two. There's going to be a longer pullback if this is truly the wave four, and then the wave five could come back and have a blow off the top of 10 to 12k targets that I spoke about. Okay, I still have my targets for July to be about 10k. So if we come down all the way into June, back into the 7,000 territory, maybe in the 15 or 20 days in July, we hit that blow off top 10,000, 12,000 region. Okay, so that's one of the ways where prices could pull down for the next 20 to 25 days, maybe even 30, 40 days for wave four, and that might drag prices to say 7,000, maybe even as low as the mid 6,000s, and then move back up. Okay, so that's one way to look at it. All right. Okay, now I've also mocked up this chart right here that I'd shown you guys before, stating that I don't often do just random projections. These are all based on previous historic bull cycles, and I'd stated some dates with it because based on previous bullish cycles, how long did it take for each one of these prices to keep hitting from the reversal of the bear market and to keep on climbing. Okay, and this is how I'm actually seeing, if we sort of measured the previous two bull markets that we've had in 2011, 12, and 2015 through 18, or 2016 through 18, I would say the next bull market would be something like this sort of trajectory that we're seeing right now. Okay, just something to keep in mind, just something fun that I wanted to do. Okay, I don't have the exorbitant, like figures that people have of 150K, 300K, $1 million of BTC by 2020 or 2021. I kept it fairly reasonable, so take a look at this chart if you feel intrigued by it. All right, aside from that, guys, I'm gonna look at a quick couple of alts because my community has been asking about them, specifically Qtum. Let's see how Qtum is doing. A majority of these alts to me are not doing so healthily because, you know, for the most part, prices of BTC are looking very shaky right now, and this might be the time where alts might pop off a little bit. It might be a far and few though, because when BTC is going down, ultimately the rest of the crypto space is probably going down. You know, let's see how the total two looks. Yeah, as you can see, you know, prices of BTC came down from 8,500 to 7,700 yesterday, and the Bitcoin market cap, or I'm sorry, the total crypto market cap without BTC went from 112 billion high to almost a low of 96 billion. Okay, so it lost about 18 billion or so, or I'm sorry, 16 billion or so in less than, you know, 16 or 18 hours. All right, so you can clearly see that crypto market cap, overall crypto space is very reliant on BTC. And another way to look at that is the Bletchley indexes. Okay, the Bletchley indexes, the Bletchley 10 is, you know, the most valuable digital assets by the highest market cap. Bletchley 20 is the medium-sized digital assets. Bletchley 40 is the 40 small digital assets by market cap. Okay, so if we start mapping that out, here's how they look. Okay, the 40 is at the bottom, the blue, the gray is the 20, and the 10 is at the top. You can see at the top, the highest market cap assets are very highly correlated with BTC. Okay, this is a chart found on Coinmetrics. You can see that BTC correlations you can do with any asset you want. Okay, all these different core sample assets that you may have that you want to pick. You can even do traditional assets right here, like the US dollar, gold, S&P 500. You can even do stable coins or ERC tokens. Okay, so the point is that when we start comparing BTC to the major cryptos, like say, I don't know, LTC or Ethereum or something that's ranked like top 50 or top 70, this is essentially the best way to gain an understanding of how the correlation has been looking. So at the very top, you see the purple, which is the Bletchley 10. These are the highest market cap assets. So this is your Ethereums, your Litecoin, Bcash, XRP, EOS. The bottoms are, I don't know, something like, I can't name anything. Maybe like something like Nebulous or let's see, like Raven Coin, Basic Attention Token. All of these are down here. Okay, so the highest correlation ones are the ones up here, and this is also reasonable because these top ones are also the ones that have direct fiat on ramps, like Bcash and Ethereum and Litecoin and Stellar and XRP. You can buy directly with US dollars, right? At least to Coinbase, I know you can. So obviously it makes sense that these are going to be faring a lot better than these down here in terms of their correlation. Okay, so just something to keep in mind, guys, when you are investing in this space, try not to get pulled into the lure of these, you know, Binance assets that are trading like 50-70%, because for the most part they're either being manipulated by fake volume or it's wash trading, which is again generating fake volume. So you want to stick with the high market cap assets because they are very liquid, right? Liquid meaning that there's a good amount of market makers or players in the market for you to get in and get out of sizable positions. Okay, so just something to keep in mind. All right, awesome. Going back to the analysis I was doing, for the most part, the crypto total market cap of altcoins is coming down and pulling back. I mean, obviously, it's no surprise that it's doing that due to the fact that BTC dumped. So now you're probably looking at, or most people are probably looking at, you know, which altcoins to get into. Okay, I would actually say that this might be a slightly dangerous position to get into altcoins because the majority of them are actually sitting on critical levels. Okay, critical levels, meaning, you know, very critical supports, well below their, you know, previous critical supports, like these ones right here. You know, QTOM specifically was supposed to be holding up in this area right here. This was big critical support right here, 740 or 750, and then it got rejected once, twice. See if I map this out, watch how perfectly it looks. Okay, big support right here, finally broke down, rejection, rejection, rejection right there, rejection, all this rejection. So this is all, you know, a big statement that QTOM has made, saying that I cannot hold up even my biggest critical support levels, and I may just go down further. Okay, and a lot of the altcoins guys are looking the same way, where they might just keep going down in Satoshi value. Yeah, they might, you know, somewhat hold up their US dollar value because BTC is holding up its dollar value. But now that BTC is dumping, you know, as we showed you guys earlier, now that BTC is dumping, these altcoins are going to take a beating, I think. You know, it's only a matter of time. All right. So I say, you know, maybe stay away from these for a little bit. Don't try to, you know, over trade, guys. And there's really no point in doing so. You're only going to, you know, risk capital that's very important, and you're going to piss it away. Okay. You're basically going to give it back to the machine, which is the market makers, the whales, the smart money. All right. So it's best that in times like these, where you see market just dumping off like this, it's best to just wait patiently and understand how to calculate your next move. And you can see right here, I remain 100% in cash. Okay. Though I had these two losing positions, I didn't just hop back in randomly and say that, hey, this is the bottom. I still don't know. All right. And I don't think you do either. So it's best you wait and just wait out the storm between the fight of the bulls and the bears, and then, you know, catch a nice move to the upside. Or if it's going down, you can short the market. All right. Now with Fetch over here, again, same thing. I don't think I see anything special in this. I mean, it is putting in, you know, higher lows right here. There's that low right there, higher low, higher low. But with BTC still so shaky, I personally would not want to trade this thing. Although, if you are interested in trading, let's see how this fib sort of maps out. All right, so it looks like it's clearly broken below the 618 fib. Probably even below the 786 fib, or somewhere close to it. Well, it looks like it caught support near the 786 fib, and now it's bouncing off. If you do want to consider this trade right here, maybe wait above the 618 fib 2700 level right here, and then you can catch this move from this area right here all the way to this area right here around, you know, say 4,000. Okay, just something to keep in mind, but personally I wouldn't trade it. All right, let's see how BNB is doing. BNB has been in a nice big bull flag for a little while, but even BNB, if we start putting up the correlation chart right here, you know, where's BNB over here? BNB right there. So BNB is this green asset right here. BNB has been trailing a lot better in terms of correlation with BTC. It had a fairly high correlation all the way into January and February, but now it's going down in correlation. It's not a negative correlation, but it's becoming far less correlated than most assets, as you can see up here. Okay, remember, anything between 0.8 and 1.0 is a very high correlation to the underlying asset, which is BTC. Anything between 0.2 and 0.0 is a very low correlation. Okay, anything in the negatives, say negative 0.8 to negative 0.1, that's a very high negative correlation. So as you can see, BNB and BTC, they're basically, you know, fairly uncorrelated. So there's really no price movement that you can gauge between one and the other. All right, but BNB, I'm certain, benefits when BTC overall is going up. So with this bull flag still intact, it is sort of struggling though. It looks like it pretty much created this high and then a lower high and then another lower high, and now put in this low and this lower low. So I would say this thing is actually trending down. I would say just be careful on, yeah, so it's something like that. You can see it's stuck in this, you know, descending parallel channel as well. It was supposed to be a bull flag, but you know, it may go down a little bit further depending on how deep BTC goes. Okay, let's check out Ethereum real quick. Ethereum went to a low of almost 237 yesterday, or actually it seems like, yeah, yesterday it did. I forget exactly how it works, because I know this, sometimes they measure in UTC right here, and I'm on the East Coast, so people who are watching this video, they don't understand yesterday is, you know, there today. So so anyway, point is Ethereum went to a low of 237, basically hitting some of these wicks right here, this one, this wick right here, holding up below or above, you know, this big support that BTC or Ethereum had. So probably Ethereum needs to stay above $230. If it doesn't, then the big, you know, next order block I would say is probably this one right here, between, say, I don't know, anywhere between 187 and 195 or so. Okay, that's going to be a fairly important one to hold up too. All right. On the 4-hour time frame, I guess you can make the argument that it could take a quick pit stop in the 215 all the way down to 202 range as well. Okay, so those are your levels to watch in Ethereum. I would say that's all I have, folks. Go check out On-Chain FX for a lot of you know, very cool data and important information. I've been starting to use this a lot more because they have this thing called real-time 24-hour volume. This was, I think, developed by Bitwise. It's basically, you know, a way of calculating the real volume on particular assets and real volume on exchanges, because there's been so much manipulation of, you know, volume being shown on exchanges that people are just, you know, especially reputable exchanges or reputable VC funds or smart money are unable to gauge how much of this is real volume. And this is actually a good algorithm written to figure out, you know, data scraping of going into specific exchanges and understanding if there's order book manipulation, if there's wash trading, if there's, you know, exchanges inflating volume. This actually helps, this real 10 volume right here that you see helps gauge, you know, which exchanges have what volume, or which assets have what real volume. All right. So we've looked at BNB, we've looked at YCOB distribution schematic. We've looked at a lot of things today. You know, specific levels to watch, like I said, either you want to definitely break above 85, 8600, or you want to break down to 70, you know, 600 if 7900 is broken. For the most part, I don't think this is a tradable zone just yet. Again, if you come join our community, you will know when I do enter a trade. It's not investment advice. I'll just let you know what I'm doing, and you can follow. I still remain in all cash in my options call account right here on Deribit. So I will be opening up some positions depending on what I see with price action over the next couple of days. Okay, specifically I'm targeting the June 14th or the June 28th call option contracts. And if prices keep going down, I might have to, you know, go into some put contracts. Okay, all right. Well, that's all, folks. Give us a thumbs up. Come join our community. Tons of Bitcoin analysis, as you can see right here. Every single couple of hours through the day, keeping my community informed of what's happening, what to do, what not to do. You know, a very active community right here, group chats. We also have user requested TA. So if you don't know how to, you know, understand specifically what's happening in price action. You can ask questions here, and we will put up charts like this explaining what is happening. So, you know, someone had a question about ADA, and I answered a question, you know, exactly with the correlation, what's happening in the chart. So we do this, you know, for our community every single day, guys. We're a very lively and active community, and we don't just give signals. First of all, we don't give signals at all. This is a community where you need to work hard, you know, to earn your keep. Go into the education channel. I have my own course. Come learn by watching, you know, how we take positions in specific trades. You can see right here, you know, I explain everything that I'm doing. If we're stopped out, if we are in profit or loss, how much, you know, I'm adding to each position right here. You know, the reasons I'm taking call options, you know, everything from understanding indicators to understanding price action to understanding risk management and position sizing, everything we do right here, guys. All right. That's all I have, folks. So come join and you will see gains like these guys are seeing if you do join the Advantage program. All right. That's all I have. Take care. Cheers and have a wonderful day ahead.